Today, I want to talk about the Bank of Japan rate hike bets. Will Japan raise interest rates again? Right? So, the yen strength amid rate speculation. Since the beginning of the year, the Japanese yen has emerged as one of the strongest performing major currencies. It has gained around 6% against the US dollar, with an even sharper rally of 8% following a 6-month high in the dollar yen on January 10, 2025. Now, on January 24th, the Bank of Japan raised its key interest rate by 25 basis points to 0.5%, marking its first rate hike in 17 years. Now, the Bank of Japan's Governor Kazuo Ueda reaffirmed that further rates increases may be needed if the economy evolves as expected. So, what's with the current economic trends and inflationary pressures? Since the January hike, economic data has continued to show robust underlying wage growth trends in Japan. However, at the upcoming March 18 to 19 policy meeting, the Bank of Japan is widely expected to keep rates unchanged as it monitors economic conditions. Now, still, discussions over another rate hike could intensify soon. Why do I say that? Because Japan's inflation has exceeded the Bank of Japan's 2% target for 34 consecutive months, with January's consumer price index hitting 4%, the highest in 2 years. Now, further fueling inflationary pressures, Rango, which is Japan's largest labor union federation, announced that its members' unions are seeking a 6.09% wage hike in 2025, exceeding last year's demand that led to the highest wage growth in 3 decades. Now, economists surveyed by Bloomberg in January had anticipated only a 5% wage increase. So since the union is seeking 6.09, actual demands have outpaced expectations. So with rising wages and persistent food price inflation, the BOJ policymakers may face mounting pressures to discuss another rate hike in the coming months. Okay. So market participants currently price in a 28% probability of a rate hike at the May 18 policy meeting. So what are the key considerations of the BOJ? Now, while inflationary pressures and wage growth suggest a potential hike, several factors could delay the decision. Now, first of all, slower economic growth. Japan's economy expanded at an annualized 2.2% in Q4 2024, lower than the expected 2.8%, signaling a slower than anticipated recovery. Whereas the quarter-on-quarter growth was 0.6%, a slight downwards revision from 0.7% preliminary with estimates, right? As for external uncertainty, US tariffs and global slowdown, with the US President Donald Trump's administration imposing new tariff measures, concerns are rising over a potential slowdown in the US economy, which could have spillover effects on Japan's exports. Given this external risk, the Bank of Japan may hesitate to raise rates too aggressively. The BOJ also has to manage market expectations. So if the BOJ hikes rates too quickly, it could trigger volatile movements in bond yields and unintended financial tightening. On the other hand, delaying hikes could raise concerns that the central bank is uh, falling behind the curve, similarly to the BOJ's historic reluctance to tighten policy in the past, right? So when could the next rate hike happen? There are 3 key potential dates for BOJ rate decision in the coming months. The first is May 18. Current market odds of a hike stand at 28%. Analysts suggest that if the Rango wage increase figure exceeds 5.7% compared to 5.28% last year, it could raise the probability of a rate hike. Now, the one that probably we could see a rate hike, the earliest would be in June, on June 16. A hike here would align with BOJ's strategy of gradual adjustments, avoiding a premature decision in May. Now, there will be a skip in July, which I'll explain later. So the next date would be September 18. Now, this aligns with expectations that the BOJ will move roughly every 6 months, minimizing bond market shocks, and maintaining policy inconsistency. July 2025 rate hike appears unlikely because Prime Minister Shigeru Ishiba is expected to hold a national election, making policy changes politically sensitive during this period. Okay, so probably we won't see a July one. So end of the day, I think the most important thing is what are the implications for US and global markets, right? The Japanese yen trajectory will heavily depend on the monetary policy divergence between the Bank of Japan and the US Federal Reserve, because at the current moment, the Fed holds a high interest rate, very much higher compared to the Bank of Japan, right? And the difference is just a tad too big to go unnoticed. So if the Fed keeps rates elevated while the Bank of Japan hikes continuously, we probably would see the dollar yen remain volatile. Why do I say that? Now, like I mentioned earlier, the interest rate is a bit still too high. And investors, they would still, when they sell the yen, they would do it very cautiously, especially when the BOJ is not very determined to really push its interest rates much higher. So with the difference, there will be times where they sell it and then they'll go back into the dollar, and then you will see then the US dollar moving up. But whenever there are risks, tariff related risks or some trade tensions going on, you will see the yen coming down, and because of its safe haven status. So this will go ding dong, up and down throughout the entire period, as long as the Fed keeps rates elevated. That's the reason why I'm saying that, probably it will remain volatile. But if global risk increases, including the US-China trade tensions or geopolitical instability, the yen may attract safe haven flows, further strengthening against the dollar. Okay, so given these dynamics, traders and policymakers will closely watch BOJ's next move as Bank of Japan shifts away from ultra loose monetary policy that could reshape global financial markets in 2025. Okay, so that's the report for today.